Well, guys, we meet again. AMC is having a good day today. We actually cracked the algorithm that is controlling AMC. If you guys have not seen that last video, check it out. We have hit literally the same low that we did hit December 14th today at the same exact price, $20.80 per share right there. And same thing for today, $20.80 right here again, and seeing a sharp rally just like we seen after we did hit that low. So I do think we are in for a bullish reversal. We have a double bottom, all of that. We'll go over it more towards the end of the day today in our end of the day wrap up like we usually do. Now, I was scrolling through, what other people were saying about AMC, and I come across this video, Apes Prepare for 6-Day Sell-Off. Now, I like Angelo. I do, and I never comment about anybody else's opinions or takes or videos because that's just not my job. But when I see a headline like that, prepare for 6 days of sell-offs because of the inflation numbers that are supposed to be coming out, that will be coming out January 12th, that's not true. That's not why the markets are freaking out. That's not even close to why the markets are freaking out. The actual inflation expectations for next year is only 2.3% after coming off of almost 7% inflation. So it's widely expected to be a little bit higher because the January reading that we will get January 12th is for December of 2021. So it's not for January. It's not even starting 2022. And I think people expect the December number to come in a little bit lower than November's, but to still be higher. Now, inflation is not a huge concern in my opinion, just in general, with investors alike, because the key things that have caused inflation are going away. Stimulus, pretty much none of that. The Fed is tightening down on the economy. So in that sense, they're going to be able to control inflation just fine. Just fine. If we were still giving out stimulus checks, even the child tax credit, we were still giving out all the forms of stimulus, right? The unemployment boost, stimulus checks, if people had deferred student loans for the rest of the year, which you have to start paying on those in May, if all of these things were still going on, sure, I could maybe agree with that statement to a certain extent. But why is the markets really freaking out today? Well, not really today, but over the past 2 days, right? We've seen a huge drop yesterday, down 3% on the NASDAQ, 3% on the Russell 2000. It is because the Fed came out and said that they are going to shrink their balance sheet. That is why the market sold off so hard yesterday, down 3% on the NASDAQ and 3% on the Russell 2000. It has nothing to do with inflation. Has not a thing to do with inflation. So I love Angelo, love all of, everybody in the movement. The only reason I'm really making this video is to clear up the false information. It has nothing to do with inflation. I wouldn't even pay attention to inflation because, like I said, it's for 2021. Anyways, investors don't care about that. If we do sell off, it is because the Fed is essentially going to start selling their assets, start selling their bonds that they own, their treasuries that they own, mortgage-backed securities, as well as their treasury bonds. And to put that in simple terms, the Fed has been buying $80 billion of treasury-backed securities and $40 billion of mortgage-backed securities per month to stabilize the markets, to keep rates low. Well, it's kept rates low. The rates are historically very, very low. When they start to sell those assets, it starts to cause rates to go up, right? The markets have been propped up on really cheap money, being able to get cheap money on a drop of a dime, lots of liquidity out there. When the Fed does actually start selling these treasury bonds, that's going to make rates go up, because if they're selling bonds, then there's more supply and the bond yields go up. The bond prices go down, bond yields go up. So, to put that into context, what happens when rates go up and why did the market sell off? Well, like I said, markets are propped up on low interest rates. At the same time, your growth stocks, your stocks that need to raise capital in the future to continue to grow, get beaten down the hardest. And that's why we've seen the indices sell off so hard yesterday, is because a lot of the biggest stocks are somewhat growth stocks and would be affected by interest rates, specifically your small caps and mid cap stocks. That's why we've gotten beaten into the ground. And ultimately, what it comes down to is yesterday was not priced in. The markets revolve around pricing things in. Take into consideration, theoretically, if we knew, like the movie Don't Look Up, a comet was going to hit the earth with an 85-90% likelihood of destroying the world, the stock market would go to virtually zero very fast, even though it's 6 months away. Same thing with the markets. They price things in there, a forward-looking instrument. So when the Fed comes out and says, hey, we're going to be raising interest rates a lot via selling our bonds because we just don't want to hold on to them because we don't need to anymore. That's why the market sold off. Keep in mind, the last time the Fed actually started to sell their bonds, check this out. You probably won't see this on any other channel, and I hope other people talk about this. Last time the Fed, since 2008, started to sell their bonds was in 2018 and 2019. Right here. It caused a 10% drop in the marketplace. Last time the Fed started to sell their bonds, they were buying them, quantitative easing, they were buying all these treasuries back here since 2008. And they held on to them this whole way, this whole way. Did not sell anything. And then they started to sell them during the repo crisis at the end of 2018 and 2019. And that's what happened with the markets. So the markets are pricing that in, and that's why you've seen that big drop. But it's still somewhat unknown. We don't have the Fed meeting, which is going to be the real catalyst, until January 26th and the 27th. Fed Jerome Powell will be speaking the 27th. That's when you can expect to see a lot of market volatility, and likely these announcements that came out during the Fed minutes were foreshadowing what's going to happen on this meeting. Because Fed Jerome Powell, he doesn't like to blindside the markets per se. He likes to let you know in advance, like he did during the Congress hearing when he did not have to say that they were going to start tapering sooner, but he still said that a week before their actual meeting, and then he announced that same thing. So the markets didn't sell off the same way because they were pricing that in. So considering the meeting is not until the 27th, there is plenty of time, 21 days in trading terms. What's that, like 14 days, 15 trading days left before we actually get to this meeting. So the markets certainly have room to rally, at least in the short term right here. Once you get down to the week of this meeting, the couple days until the meeting, that's when you will likely see possibly some short positions get put on. Possibly. We've already pretty much started to price in what's going to be said on this meeting. So this could be an uncertainty event, could cause a little bit of fear, and we could skyrocket right after because it's priced in. Hopefully all of this makes some sense to you guys. Also at the same time, even bigger than inflation is the yield curve inverting. And you guys can see the US 10-year Treasury has went from a rate that it was paying of 1.17% back here in just August 2021. You might think that was a while ago. That just passed August 2021. 1.17%. Now it's at 1.70%. And your loans that you would get from the bank, your car loans, your mortgage loans, they more or less follow the 10-year Treasury yield. So all in all, nobody's worried about these inflation numbers. And I just want to put that out there straightforward to you guys because I don't want anybody to freak out about that day. In 6 days, nothing's going to happen. Well, correct myself. Something could happen. But unless it comes in really, really high, like blows our expectations away and makes people start to price in much higher inflation for 2022, that could be a problem. Is that likely to happen? No, that's not likely to happen whatsoever. Now, take a look at this Fed meeting or Fed minutes eyed for details on rate liftoff, shrinking assets. And that's exactly what happened. This was at 12 a.m. Eastern Standard Time. That's what happened. It says the balance sheet of the Fed is at $8.8 trillion. They're going to flood the markets, even if they get rid of 10% of their assets, which it'll likely be closer to 25-50%. That's over $1 trillion that will get basically flooded back into the markets, which will drop the markets. Raise interest rates, drop the markets, because interest rates went up. So hopefully all of this makes some sense to you guys. Inflation, not really a concern. They also said yesterday, the Fed, in their new dot plot, basically when members think they're going to raise interest rates, all of them agree in basically all of them agree in 2022 that we're going to be at about 0.75% interest rates. So that's about 3 rate hike increases. Some people think even more. Some people think 4 rate hike increases, over 1%. And then ultimately, you know, people are expecting higher rates. Even one person up here expecting 3% interest rates by 2024. Definitely a hawk. But overall, you know, it was just unexpected information that we got. Inflation really doesn't mean anything. All the markets care about right now is interest rates. So I hope you guys like the transparency of this video. Not trying to call anybody out. I love everybody in general, shills, all you guys, creators, everybody. But this is not why the markets are freaking out. The markets don't care about the inflation numbers from December more than they do what the Fed is going to announce. That's going to dramatically change the situation on how you value companies due to interest rates. So that is going to do it for this video. Hit that like button for me. Consider subscribing to the channel. And if you want all of my trades in real time, we have been killing it over there. Check that out. Link down below in the pinned comment of this video. Love and appreciate you guys. Thank you for watching. I will see you in the next one.